Hi, Lauren. We are fashionably late, 4 minutes past the hour. Happy belated Thanksgiving. How you doing, bro?
Happy belated Thanksgiving, happy belated Black Friday to you, and happy early Hanukkah, Christmas, Kwanzaa. Like we're in that couple weeks of the year where everyone's figuring out how to wrap their year up.
Everyone's
So
pretending to work, right?
that's what.
Everyone's pretending to work.
Well, I think a lot of people pretend to work throughout the year, but like now it's I was watching like a little viral video where someone like a manager told their employee to they wanted something by EOD, right, which we all know is end of day, and the guy was like, yeah, we're on track for EOD, like EOD's great, blah blah blah,
End of
and
December.
he was saying it was end of December is when he wanted to get it in, and the I guess the manager was like, "No, it's end of day. It's not end of
Mm,
December. We're still
yeah.
working for a couple weeks." So that's what that is.
I feel
But
like there's been more honesty of late. There's been a good few blogs that were excellent about people inside the tech world talking about how obviously some people like us and like our guest work very hard, but within the tech world, there's a certain tolerance, sometimes encouragement of people who don't do a whole lot of stuff by end of day,
yeah, well,
by end of month, or whatever.
yeah, end of day, end of December, get it next quarter, whatever. But anyways, yeah, we've got Raj Sen here. I'm excited about this show. I've known Raj for a little while, and Raj, recently exited his company, sold to Databricks, and we're excited to go into what that journey was like, what it's like to sell your company. A lot of folks out there right now in the data and tech world are figuring out like this M&A landscape, and if you have questions, feel free to put them in as always. And yeah, Raj, we're happy to talk to you.
Hey, thanks, Matt and Lauren. Great to come back to the show. And I think, yeah, I also saw that video. I think we're moving towards a next year. I think it will be, I guess, end of those nice days where you can, go for surfing and come back. And like, I think, people are feeling the pressure. Zero days are over. So I'm really looking forward to people doing the right things, and we have talked about it in the last show, right? Like just not working hard, working smart, saving money for your company. That's one of the goals. I think next year every employee will be forced to think along those lines. So but again, super excited to come back to this show.
We're going to talk a little bit through your journey of founding and selling. But before that, I have two quick questions. I want you to walk us through a little bit like that right after an acquisition happens, like what are those days like? And even more important, before we get to that, you just had your company acquired. Can I borrow some money? Because according to what Databricks put out, this is a hugely successful, success.
It's I think fundamentally, I think I would owe the success to the team. I think we built an incredible team, 90% engineering. We were a frugal startup, like whole and sole focus was to build product, and also to build a product that we believed in. And we didn't venture out on other things, like very focused on databases, CDC. So we were not looking for like an M&A, but when a company like Databricks calls you, you have to think twice, because they were investors in the company. I've known that company for a long time. Big fan of Ali and the founders, and I think one of the companies where we are solving the right now, it's we. So Databricks is always trying to solve things in the right way, and I think it's good to have a few challengers to some of the leaders now. So that we and the team, we are super excited. Give you some stats, like which is, hey, uh, except for I think one person who was on a medical leave, every employee of Arcion transferred over to Databricks, and everyone is super happy. So this is like one of the successful acquisitions, like where everybody is happy, including people in sales, marketing, engineering. We had operations across 3 continents: United States, Europe, and India. In Europe, we had like multiple centers. So everyone has joined Databricks. Everyone is happy. And, for me as a founder, like nothing makes me happier than my team members smiling like, hey, sometimes, you hear of acquisitions where 10% of the people are like, whatever. This is an outcome where each and every employee of Arcion made money and are happy right now in their new roles. So
I see you're avoiding the question on sharing that money with us, but we'll talk about that after the show. But how many employees at the time of the acquisition?
we had close to, let's say between 2 dozen and 3 dozen. So without giving exact numbers. So we are a pretty frugal startup, and most of them were engineering people with a couple of people in the marketing and sales. We are already product led, and we were partner led for a long time. Like most of our selling was done by great partners like Databricks, and we had other partners as well in the mix. So most of the selling was through referrals. So we really didn't have a big sales team. Most of it was engineering. So it's a great outcome for the team. We made sure every employee made money, just not the investors and founders. I've always believed in it, in good karma, because this is my first company. I really wanted to make sure every employee made some reasonable amount of money. And but post acquisition, it's also like a transition from small company to big company, knowing 4,000 other employees, getting into the true corporate world. So I think that transition is also happening right now. We were on the famous Lawrence's favorite company, GitLab, for a while. So we're doing the source code change, migration and all of that stuff. So a lot of good thing is I think for the engineering stuff it was all same. Like we use Slack, Databricks uses Slack. So a lot of those things are common. But yeah, people are getting on. I think most of the onboarding has happened. I am actually doing this show using the Databricks laptop now, not from the Arcion laptop. So I'm officially fully transitioned. We are building the same thing in a better way. So our vision only got increased. So we'll be still doing database CDC in a much better and more managed way, for the lack of a better word. So you'll hear a lot of product announcements and updates from Databricks product team, and I'll be still leading. I would say I'll be the engineering face of most of it going forward. So.
Yeah, excellent. And a lot of people, people always talk in the whispers, and they talk in, on the side about things. And I think a lot of people, said after this happened, CDC, like with Databricks environment, that's interesting. They have, Databricks has been doing a lot of stuff around Delta tables, Delta Lake. How does CDC play into Databricks going forward? With Arcion and your team, coming up to the mothership. Like how is that going to maybe change or get more robust in the system?
Yeah, great question. So we already, we had a lot of joint customers with Databricks. So as there's a fundamental shift from the batch-driven data warehouse, which has been the most popular version of. So the transition from an on-prem data warehouse, which was Teradata, to a cloud data warehouse, which was an on-prem software ported to cloud like Redshift. But then, I think Snowflake was like the first implementation of like a cloud experience of a warehouse. But the warehouse was still a warehouse, like everything was batch driven, so there are a lot of latency sensitive workloads driven by real-time analytics and machine learning that drove Databricks to build Delta Lake. And Delta Lake is, in my head, a system of record for all your analytical data. We built an integration into Delta Lake, working with Databricks for the last 2 years. So Arcion and Databricks joint customers can stream data from any database to Delta Lake most of our SLAs are within a minute or so. And we are 200x faster than one of the biggest cloud SaaS companies right now. And I know Lauren has a smile there. So we continue the same journey with, hey, if you have data in any data source that's like has critical transactional and operational data, then you could stream the data to Delta Lake with the new product offering that would be there announced soon. I think what would change is the software that we've built from 24 customers to like a couple of thousands to start with, maybe.
Yeah.
So we are under the hook to deliver this thing with a better user experience, with more alerting, better monitoring, and all of it. And in my first week, the only people I heard from was the field team in Databricks asking me, when are we going to get this out, in the new form. So we are like, now pressure is on the joint team to deliver this thing. But Delta serving as the data platform backbone for serving ML and all the others needs is like a huge thing. I think obviously, there are other products like Iceberg and Hoodie in the market. I think Hoodie folks have taken a little bit of different stand on, they're playing more on the conversion thing right now rather than, just Hoodie being the best. But I think we will. Oops.
We can hear you.
Yeah.
We can hear
So, so I think our team is focused on making sure like data gets delivered to Delta Lake in real time as much as possible from a wide variety of sources. And I think we had the Delta 3 release. Databricks, I mean, the official stand is that we promote Delta, but I think we also promote the Lakehouse concept to the extent it's good. Making all of it open source. And I know some cloud vendors, hey, we are this other format, but the source code is never open source. I've been very vocal on this on Twitter, like, you can adopt an open source format, but if you don't make your adapters open source, then you are not doing anything for the community. You are just
you're just mixing closed,
just
open,
wanting to compete. You are just wanting to compete. And I think Microsoft is the great example. They built Fabric on top of Delta, and they made sure that interoperability with Databricks is already there. So I think there is going to be a big transition for certain kind of workloads from the warehouse model to the Delta model, especially when the data needs to get delivered in real time for machine learning, retraining, or real-time analytics. And we'll see how things go. We can't predict the future, and we'll see. I just feel like the founders of Databricks had a vision, and the vision is very engineering and product driven. And that is one of the big reasons like we went ahead with this acquisition, like, because of the belief that I have in that team. Even before we were partners, even if I started the company, I had tremendous respect for Ali, Renald, and all those folks, even before starting the company called Blades and Arcion. So I think we'll see how things go, and no one can predict the future, but I think we are seeing a lot of demand for this. So
yeah, that makes a lot of sense. Excuse me. You mentioned an interesting point here, and so if our viewers, some of them are not aware, like, there's three major competing formats, if you want to call them formats, right here around the lake house or around the lake architecture. And there's Hoodie, and the folks that developed that run a company called One House. There's Iceberg, and the folks that did that originally, they run a company called Tabular. And then there's Databricks with the Delta format. And it's very interesting to me always because at a certain in a certain way, like all three of these want the pie to become bigger, and say like the lake house as it's described in very abstract general terms, is usually cheaper, better latency, which means faster, and more efficient than like a data warehouse. Maybe it's Snowflake, maybe it's GCP, whatever. So everybody, all three of these players in this space want to promote the lakehouse, and move the pie over there, but all three compete for the pie in the space, right? And so everybody who says, okay, maybe I'll do a lakehouse, and this is the way that things are going. We've scaled. This is more efficient actually than what I may be doing with other, cloud vendors, etc. And my point here is that, like, and this is leading into a question here, is like where do you see this space going in the future with Delta versus Iceberg versus Hootie? I know Hootie and Iceberg, they traded some barbs, very very nerdy stuff. But they've been like sniping at each other a little bit in the last couple of weeks. I think it's all kind of funny myself. But where do you see this going, and how are you, Raj, in your role, kind of managing customer expectations and steering them towards a lakehouse and towards Databricks, and how do you see this whole space?
So it's too early to judge, but I think like within Databricks, we have seen a significant adoption of Delta Lake, right? And not only customer-wise, but look at like vendors that have gone and built things on top of Delta. Microsoft and Oracle both have built products on top of Delta. This is no joke, Microsoft has built Fabric on top of Delta. Oracle has announced, support for Delta in their analytics, cloud analytics thing. So that speaks volumes of the technology that's built. I think from what I gather inside Databricks and what we mentioned is we do believe that interoperability is important. Not only through external vendors, but I think we also build something called Uniform, which helps conversion across formats, and obviously, TBD, that's going to be better over time. I think from my, I started in this space in 2003 from Sybase, right? So I was in, I've seen the Sybase IQ days, the first columnar database before the likes of Vertica and all became popular. From a technology point of view, if you ask me, I think there will be an audience for both, and the battle will be for the processing engines on top of these open formats to be performance wise competing with the closed formats, because with the closed formats you can do a lot of indexing and all a priori, and it's in your control to move around data and all of it. Now, how much of that intelligence can be pushed to the because right now we are looking at even though Snowflake is storage and compute decoupled, it's still everything inside one system, right? Like you can still play tricks around having better indexing and all of that to make your queries faster. So I think we have a great team inside Databricks for the SQL compute. And I think as more and more vendors work on this thing, they will be naturally forced. I think at the end of the day, it's like, I have this workload. I need the best performance out of it. So is it a warehouse or is it a lakehouse? I do know that all the lakehouse vendors are putting a massive amount of investment in making the SQL experience better. And then whoever has the better SQL experience is going to win. My personal take is on the lakehouse, if you can get 70 to 80% of the data warehouse like performance, you're going to win. You don't need to be at 100% even, because the cost savings are so huge, and you're not locked into a vendor. Even if you get to like 70-75% of the warehouse performance, it's you're going to get the deal. You don't have to even be better. I know some of our numbers are better than the data warehousing numbers on TPC, but I would, if I'm a data engineering guy and I'm having X $million on a big fat warehouse and I can save some money, and my reports have 80% there, I would take it, right? Question is, how do you get to that 70 to 80% performance, right? When will vendors get there? We are getting there gradually.
Yeah, that'll make sense. The
But what you said
just
earlier, right? There is still like a huge amount of workloads that run so well in that warehousing model, right? Like a lot of apps have been built. So all those apps have to be ported now to the new thing. So that's another journey that has to happen over time.
Mhm.
Legacy apps running on warehouses is a little different than new modern apps on real-time analytics and machine learning. So there is that whole gap to be bridged. Like, who's going to port all those legacy warehouse apps that are running? I think the first journey that needs to happen there is all those apps running on Teradata to run on BigQuery and Snowflake. I don't see that part as even finished. So,
Yeah, I don't think it's finished either. There's still a ton of stuff out there.
yeah.
Yeah, I mean, and I mean, I listen to every Snowflake earnings call. I'm very close to that stock, as a stock and as a company and as a practitioner. And this week, Snowflake reported their quarter, as they do every quarter as a public company. And one of the big trends there, and I'm getting a little bit in the financials here, but one of the big, there's a guy named Keith Weiss. He's an analyst. I believe he's JP Morgan. He said to the call this week, and asked, Frank Slootman, who's the CEO of Snowflake, hey, like this, in the 11-minute call, you've already mentioned unstructured data 12 times. And last quarter, you mentioned it 2 times. And earlier, you've mentioned unstructured data less and less. But unstructured data is becoming a big thing for Snowflake. Mr. Slootman, can you explain? And he said this on the call, and that's been a thing that like a couple of my friends in the space who are founders or various investors and things, all emailed me and said, oh, what's this unstructured data thing, Lauren? And I think it's interesting, like that, like Snowflake, which let's be clear, like they're a competitor of Databricks. Everybody knows that. A lot of companies will use both for various things. But like, what is the take on this? As Snowflake and their analysts will call it, unstructured data and Snowpark that they're using and doing well on. I believe it looks like they're doing well on it in the last couple of months, in the last year or so. How does that kind of play into like what Arcion might be doing, or Databricks might be doing, and what else is going on in the space of this unstructured data? Is it always there? Is it just AI driven because AI is the buzz term now? Like, how can people make sense of all this?
I think I've seen that. I think they have this new variant format that's I think should have done a very successful implementation of it for that much of a revenue kick. So kudos to the Snowflake team for delivering that. We will be announcing something very soon. I think I have to dig into details on where the data is coming from and who is getting the data out. And I think if you see historically, batch data warehouses haven't dealt with unstructured data in a very good way. Even
Sure.
today, like I think you could just go to Twitter and LinkedIn and people complain about unstructured data handling in every data warehouse platform. So I think they figured this thing early on. Some smart people inside Snowflake. So I think I feel my personal thing would be, this is not a net new thing. There has been that demand for a long time. Like data warehouses are usually very structured, so, and they're so bogged down into their scalability. There's that, like no other vendor probably thought about this thing in a holistic way. somebody at Snowflake might be like, okay, you know what, like we'll solve it first in the right way. There is a ton of unstructured data, not only from the MongoDB and that kind of stuff, like just plain unstructured data. When we were an independent company, we would have tons and tons of requests from healthcare companies. Oh, I have all this data from Epic that's unstructured. We can't go back to the database to make any sense out of it.
Is that just like text-based, like EHR records?
I feel unstructured in this case might be like 70% semi-structured.
Okay, sure.
As true unstructured data in the classic terms means text and video, like just an engineering definition of it,
Yeah.
which generally doesn't make any sense for like analytical processing, like in the way we think of it, right, in lake houses and warehouses. But I think if you take that definition to, hey, maybe this is 70% semi-structured data, which is coming exported from different other platforms, and you can go back to them, third-party data. We're talking to one of the bigger retailers a couple of months back for a contract. They had tons and tons of third-party data from their sellers, and you would think that those sellers are also exporting them from some database, but you can't have the seller accessing their database, so everything is exported as some kind of JSON, some kind of so I think there's a huge market for that semi-structured data on the analytics side, which is, I don't think people have exploited that market in a big way, primarily because people thought that it's like a tiny part of the pie, right? Now we know that it can impact your earnings, so I guess everybody's I'm sure.
Yeah. I mean, now
And
it's the buzz term, and it's going to be like,
yeah,
it's not pure buzz, but like,
it's
it's a
also,
thing now.
if you look, it's also, you have to think that if you look at MongoDB, right, I'm a huge fan of that company. Like we are partners. So the way MongoDB has progressed in terms of usage and all of it just shows that a lot of people are willing to bet on that unstructured, semi-structured like data model for the operational and transactional use cases. So we are seeing all of that. Like I think I personally can talk about semi-structured because I'm not a text and video guy. So I think there's a tremendous potential for doing semi-structured data loading into warehouses or lake houses and then making sense out of it to the extent that, can you identify schemas within it? Can you identify even basic things like, foreign keys? What are these data, right? Can you put attributes on it? Like there is a big open problem to be solved there, I think, and we are solving some of that inside Databricks for sure. I know that, and I'm pretty sure Snowflake have some teams working on things, but that's going to be huge because the more data you have, I would say 30% of any data would come in semi-structured form, given how easy it is to hit an export to S3 button now. Remember that 10 years back, there is no way to share that data, right? Now there's a lot of ways to share the data. Like a developer could just export it to S3, obviously, TBD, CISO, but there are ways to share it. Earlier, you would have to go to a FTP server and do it like 15 years back. Now, sharing is easy. So we are going to see a lot of data being shared that wasn't shared before. And most of the sharing will be semi-structured because you're going to have CSV, you're going to have I do see a technology trend in the future that eventually a lot of vendors will build a export to Parquet, that kind of feature. Then some of this data may not be unstructured. They would be semi-structured with some schema information. Maybe people have an export to Delta in 5 years. So I think what you are seeing as structured and unstructured today, in few years will be semi-structured with the schema information. That's a technology thing. Now, how do you bring that data in? How do you make sense out of that? That's the compute horsepower and intelligence that has to be built. Does that make sense?
That all makes sense to me because I work in this stuff and have for a bunch of years all the time. But it makes total sense to me, obviously. Maybe, excuse me, pivoting a little bit, like what is, like everyone knows, like So in the startup world and in the, you know, financing world, tech world, everybody knows that like Databricks is one of the biggest like darlings for like an IPO in the future. You know, it's up there. Like Stripe is also mentioned usually. There's a couple other companies that are often mentioned as, you know, we're going to do an IPO. We're you know, it's going to happen at some point. And you know, like now that you know your team, you've gone from startup to now you're like, you know, you have a vision ahead of you. Like, has anything changed on your team, or do you anticipate it changing on like how you know, you folks are going to you know, help support this mission going forward? Like, how has that been a paradigm shift to knowing that, like, you know, going from startup to one of the largest, you know, privately owned tech companies around?
Yeah, I
How
can,
is
I
that
can.
kind of been?
Are we getting into
It's
the no comment territory here?
no, no, no. It's well, I mean, you know, everything that you said about Databricks is true. I think even if this discussion were not post acquisition or whatever, I would have still maintained that, you know, this it's one of the, you know, I would say in the data space is the best company to work for. You know, so even, you know, when we are partners, I probably referred like 24 people in my network to work for the company. So I think what makes everything interesting is if you think about the Arcion team, right? We had milestone 1, which is, you know, the exit was a great milestone. But if this exit would have been to a public company, there is no more, you know, milestone. Like, I mean, generally, you know, the excitement levels are not that.
Sure.
Like, you think of like right now we are like in a company that's like, you know, solving the most important problems. Darling of not only in the industry, Lauren and Mary, like we are very popular amongst developers and engineers. They just love working on our software
Yeah.
because we have been open source, and, you know, nothing is like, you know, we are only Databricks and to support other things. So we have maintained that neutral stand forever with our open source strategy. So what makes it interesting is that everybody is, the company is still like works as a startup. And, you know, that milestone that you talked about will happen at some point. So as for us, the acquisition was much more interesting because even after the acquisition, it's still like a journey. Like there is super like like we're still in a startup mode, so we are waiting for the next, you know, milestones in terms of revenue, in terms of IPO, whenever that happens, right? I don't think there is any timeline or anything, you know. I mean, we'll probably do when the right time comes. I mean, we have the best CEO right now leading the company, so so everything is like, you know, we have these milestones which generally post acquisitions, you know, disappear for many companies. I think for us, we are lucky that, you know, even after an Archeon milestone, there will be several milestones as part of Databricks. That makes this thing like so cool. You know, like there is so much to do, even when you're part of a bigger company, because this big company is also operating like a very well executed startup. Like, you know, there's nothing like a
Sure.
big company thing here. So we are looking for the same milestones. I think more than personally for me, IPO and all is like an outcome of business. So, you know, I think we are doing phenomenal in terms of adoption, and, you know, if we can load more data in to the new platform, I think we will do much better. So very not at all concerned about timing of that milestone. It's going to happen whenever it happens. You know, we have to deliver, and, you know, got to do. There's so many good problems to solve yet, you know.
Absolutely. Oh, we lost Lauren for a minute. We'll pull back while Lauren's gone from the deeper technical stuff, Raj, and just talk more about the acquisition and what you are. You know, a lot of our shows are talking about just generally the modern data stack, and you're sort of, if you look at other, you know, most startups right now in the modern data stack, you're obviously absolutely living the dream that I think most founders will not be able to live, heading into the next, sadly, 24 to 48 months, where I think
Arcion was never part of modern data stack for whatever reason. You've seen my comments on Twitter, like we never put marketing dollars to be member of any club.
Sure.
So
we'll just say that the data centered startups, what did, again, not, even if I'm asking you to brag a bit, what are some of the things that you did right that maybe some of the other founders aren't doing right?
I don't know what others are doing, honestly, but I can tell you what we did as a team, just not as a founder. I think what we did was whole and sole focus on building technology
product,
rather than going out and claiming a lot of things or marketing. Like we were one of the least talked about companies, I guess, in this whole space. But what we did is, we are not sitting idle, so we are building products with our partners. So we had great partners, and obviously the number one of them was Databricks. So we have also other partners where we're working very closely with. So great customers who gave great validation for us and really stuck to our mission. I think that's very critical for any company. Like if you start with CDC and you say database and CDC, like you got to deliver and don't, okay, now SaaS stuff is cool. Fivetran is doing great. So, start building SaaS apps. We never did that. And so I think one reason why our partners, especially, got successful with our joint customers, Databricks, was our razor focus on what we had initially set up to be. Like we are always a CDC company. We never changed our mission. If you look at our website for the last 3 years, we never said anything different than CDC. So that helps in clarity, not only as a founder, but as a product team, as an engineers. Like our engineers knew exactly what to do from day one.
And very little focus and budget on marketing, essentially.
We did spend a little bit of marketing to the extent it's needed, but I mean, you can see like we never were part of any of those clubs doing, sponsoring stuff. So I think we let product do the talking.
I call it the mascot team. There was never an Arcion mascot.
I mean, we did attend the Databricks conference for 2 years because we want to talk to the developers. And we went to Oracle conference because we want to talk to our users on the other side. But beyond that, I don't think we spend a lot of marketing dollars. And honestly, like I think who knows, I think a lot of companies have like 100 million, 200 million of funding. They obviously have the leverage to spend on marketing. Nothing bad in that. If you have the money from the VCs, why not spend it, right? We had reasonable Series A, and we want to make sure, like, I had the luxury of a CFO who was our CEO. So kudos to him, because he had been a CFO role before we could anticipate that dark days could be coming. So let's never ever spend too much money on. It's good to have a ex CFO as a CEO also to keep everything in check. So I would advise founders to be, hey, there is no point in doing 100 podcasts unless you have the marketing budget for it. Like it might be worthwhile spending that money building products and let customers do the talking, because right now in the data space you have to differentiate. Just look at how many vendors are there to solve one particular problem. How will you grow your customers? Like how will partners trust you? How will resellers trust you, right? It's only possible when you have happy customers who are willing to talk to other customers. Like if I just ask any of my customers to talk to another prospect, like they are like, okay, give my number and email, I'm going to talk to. Like we have that kind of leverage right now. So focus on product building. I haven't seen a lot of new companies in the data space with too much marketing blogs and like a lot of podcasts, this that. I'm like too much content marketing may actually harm you if the product is not up to it. See, Oracle is a great example of it. Oracle marketing works because they still have the best on-prem database, right?
Sure.
Otherwise, Oracle marketing wouldn't work. And so I think marketing only works when your product is good. So I don't know. That's all we did. Like, stay relaxed, stay cool, focus on product, let the product do the talking.
So
We'll see.
don't spend your budget on influencing mascots.
But,
Maybe a Slack community. What were some?
No. A lot of companies have had mascots, and Datadog has had mascots for a long time. They are one of the companies I look forward to. Like, every product is like getting $100 million new products. So, that's you can have mascots, but have a good product along with the mascot is what I'm asking.
Have the product first. What were some mistakes made along the way, or is it that you sort of said immediately, I should have done this differently starting out?
I think tech product wise, I think lots. I think we should have announced our cloud offering 1 year earlier, I would say. Reason could be lack of funds or whatever, right? I think that's something, personally as a founder, it's on me. Other, people tell me you could have raised a little bit more. And I don't know what's the answer to that. I think one of the things that, definitely on the product side, we should have launched the cloud product earlier. And I think one other thing was, I think we could have been more aggressive on on the unstructured data thing. I mean, we had very good connectors on MongoDB and others, which, I mean, before the Snowflake thing, I never realized like that opportunity was that big. So, we could have loaded more data into Databricks even before the acquisition from the likes of, unstructured databases like Dynamo or MongoDB. So I think we are focused a lot on relational data sources. Maybe we could have done a little bit more on the semi-structured data sources. But yeah, coming to the launching the cloud could have been much earlier for us. And I mean, I just feel like it's an outcome of me having worked in SAP and Oracle long enough that we had the hybrid model for the longest amount of time, and then now obviously we have the cloud in Arcion now, and the new product will be obviously a SaaS thing. So yeah, those are the typical mistakes I think on the product side. And on the funding and marketing side, I mean, who am I? Like, I'm like just, I consider myself to be, engineer still. So I don't think like, still I have to figure out like, how to give advice to people. So, I'm just helping a few companies now, and that I believe in their tech. So, I'm still not like a classic VC kind of person that you would look for advice. So, so.
Absolutely.
Yeah. And I guess on that point, and anybody out there in the audience, I know I'm sure there are a few founders out there who are watching this, or who will watch this at some point after we post it on YouTube and everything. Like what advice would you give for like first time founders of data companies, whatever they're doing, like yourself here? Like what's like the one or two biggest things that like somebody who is in your shoes and they're a first time founder, they're very technical, they want to get a good exit, they want to build a good product, serve customers. Like what's the one or two things that you've learned here that would be the best advice for them?
The first advice I would give you is never start a company with one technical founder like me. So never ever do that. It increases your blood pressure. It increases a lot of pressure on your spouse, on your family. So never ever do it. Like always start a company. If you have a brilliant idea or you're very passionate about an idea, try to find a technical co-founder. You everyone, like any space needs like two technical founders. I just advised like a founder recently, like, please do not start a company. I made that mistake, and I lived with it. B, try to find a product person early, because in my case, because of being the sole technical founder, I had to do the engineering and product thing both. And sometimes the same person doing both the things is not, it's harmful for the company. So you got to find like a good product person early on to help you with the user journeys. And I think one of the things where Arcion actually did well was simplicity of CTC pipelines. But we landed in that because, one of the reasons we started the company was that Golden Gate was too pricey and difficult to use. So we solved the problem of simplicity because of the need of the market. Sometimes when you start a brand new thing, see, one thing for Arcion was we didn't invent, like, we solved a problem that was already solved by Oracle and others, but in a new framework, right? But a lot of people start companies that are net new concepts, right? Like whatever, I'm just giving an example, text to SQL. I know that market is gone probably with OpenAI, but
there's probably 200 of those companies out there right now.
Yeah. So when you start that kind of new stuff, you have to make sure like you have a product person early on to help you with the user journeys, because engineers are not very efficient in figuring out the user journey because they are not the customers. You already know enough about the space that you have to pretend like you don't know anything. And this is exactly why one thing I really love about Fivetran is the user journey is very simple. I think kudos to them for having figured out that whether it works at a high volume or not is a separate thing, but if you look at that company, the user journey is very simple. So I think any founder should think about the user journey, and if they're a hardcore engineer, they should also like have somebody else do that work in the company.
Sure. Right. Find a
sooner,
special.
yeah, sooner you figure out the user journey and make it simple, I think you'll be successful. And those are the two things I would say. And raising is, again, like some people want to raise too much money to have that cushion. Some people wants to raise less. Like we were in the camp where we didn't want to raise more than what. I always feel that whether you raise 15 million series or 30 million series, you will end up with the same series B revenue. You're always going to spend that extra money, and you might be like 5% off. You raise double the money, but the actual revenue could be like just 5% off. I've never seen a company which raised double the amount of money and actually double the revenue. It never happened. So given the economic situation, I think it's good to be a little prudent on the amount of raise, and other aspect is you actually if you have an exit, then if you raise less, you have more for your employees, you see, like, so it's just optimizing for the team. So we had that luxury that because we didn't raise too much money, our employees made a lot of money. So that's that benefit that people like you as a founder. Hey, my founder made sure I made money. So a lot of companies exited, where I know of a lot of exits that have been the value mentioned on the internet probably 3 or 4 times than our company. But I know that our engineers made a little bit more money than those.
You bring up a point here that a lot of folks, like, I don't want to get on a big soapbox here, but like a lot of the employees of these companies, like, we work in a small space. Everybody does. Like, like in 5 years from now, you want to start a new thing, or you want to work somewhere new, or you want to do a new thing. Like, everybody knows everybody. And if they don't know everybody, they're like 2 degrees away from everybody. And, by raising less money, you dilute your employees less. And, if there's all kinds of stuff you can get into about like capital structures and preferential shares and, different ways that works. But like, if you take care of your employees, when you want to build your next thing in 3 years, 4 years, 5 years, you've already got people who like want to work with you again, or be your co-founders. But
Or you
when you
could
raise
have some of
money,
the people starting their own companies, so that's
yeah,
like,
yeah,
one thing I'm looking forward is after, 5, 6 years, like I want to see some of our Archeon engineers start their own thing with new ideas. I want to help them. So
yeah.
it just creates that whole good ecosystem. I think raising less is, you have to, like, you have to raise enough. And then
Mhm.
there is always going to be, like, somebody's always going to come at you and say, hey, the VC market is always like that. It's pattern matching, right? So the moment you have one check, there'll be like 5 others ready. So, and those
Mhm.
checks will be bigger because, hey, why work with us? Because we want to give you more money. So you have to think about all of those aspects, because at the end, employees are the ones you have to also think about, other than investors. So you have to balance it out. There are a lot of companies in the data space with huge valuations. We have to see what happens right now, because I mean, there are a few companies like Fivetran who have just made it big, like huge
Yeah,
user base,
billions.
successful
Yeah,
product. Like, I think, I mean, can everybody repeat that model? I mean, I'm not so sure, because, I mean, this is like machine learning market is more on fire than the data market today. We've just got to admit it.
sure.
Though I feel without data, there's no ML, but, it's, we have to see. I think we're keeping at Databricks, obviously, we're keeping an eye on the market, and, I think we'll see what happens. It's an interesting next 12 months. I think I seen, go to LinkedIn at night, I see a lot of people have predicted a lot of things about modern data stack and what's going to happen to the companies. So I don't necessarily agree to all of it, but I feel,
Well, and bringing it back to what you express so much both concern and joy for your own employees who put their heart and soul into Archeon, obviously, which is kind of the mentality of startups. But what I've seen with some of these startups and the equity packages and stuff, where when we see clear over evaluations and a younger employees who are really going to lose out here. And, even if someday there is an acquisition or whatever, the package they think they're getting as compared to what they're really going to get. There's obviously a lot of people who've been misled. I would say myself included, right?
well, I think, good question. I think I do feel that one thing I never, when I was an employee at a startup, not as a founder, I hardly cared about all the, preferred stock, common stock, what's if there's an acquisition, what happens. No engineer cares about it, and I don't think engineers will care about it, because their focus is on building software.
Mhm.
I think it's unfair for engineers to worry about those things. I think it's the founder's responsibility
Mhm.
to make sure like these things are taken care of. Like, I can't imagine like how an engineer would think about it. Like, come on, like, you just got to graduated from whatever, like, let's say whichever university. Like, you're not going to, you're building your own stuff, trying to make a mark for you in the company. You don't want to worry about preferred stock, this blah blah blah, right? How much dilution is happening. Some people do care about it, and based on the company's constitution, some companies share that. But I feel founders should be the people who have to protect their employees' interest. That's whole and soul the founder's responsibility. Founders are the bridge between investors and the employees, right? So I mean, and because you took money from the investors, you're naturally gravitating towards protecting people, that segment anyways. So you have, by virtue of being in the board and stuff, you have to do that duty, right?
Yeah.
Of
From I've
making
seen,
your
you're
interest.
very much
Yeah.
the exception rather than the rule, sadly. But
Well, I know a lot of founders who think like me, so it's not like, but we'll see how things happen. All I know is successful exit doesn't necessarily mean a lot of money for employees. That is uh, in a given, and I would love, I mean, my thanks to my CEOs, and we we made sure like that wasn't the case with our company. So, because I would not have been able to talk to you guys with a straight face if that would have happened. So.
Yeah.
Fantastic.
Well, we're coming up on the hour here, but no, it's been great chatting.
And
with you
again,
about
like any founder, like you want advice, hit me on LinkedIn. I generally don't respond unless I see like somebody wanting some founder suggestions or something. If you're like a biz dev guy, chances are I'm not going to respond to you ever. The next 1 year I'm busy. But if you're a founder, want advice, I'm still available on LinkedIn, maybe not Monday to Friday, but I'll try to respond over the weekend on advice. So, I'm also advising a few startups now, going to announce a few things next week. So yeah, I think always, I will have some time to help founders.
Yeah, I love it. And, we'll get you back on to do a more advice from Raj hour down the line. And of course, we'll be watching the journey at Databricks. Super exciting. And we're very happy for the entire team.
And I'm very excited because I want and before the show, just to end on this, Raj is telling us that, he's got the swag, the legacy swag now of Arcion on here, which did not splurge on the polo. What was a good, fiscally responsible. We're going to get some swag, but we're not going to go crazy on it. We're going to think about how we do our swag, and he's got it. And now that Arcion's part of Databricks, there won't be any more. So, this, $12, $15 polo customized, it's popular now. Now it's going to be, now it's probably 10x in valuation. So if I can get my hands on one of the polos, I would love it. But
we will ship some polos. We have some polos to be shipped for our, admirers. So
I'll auction them off to charity.
Well, great to speak with you, Raj. And if you want to chat with Raj about data advice, hit him up on LinkedIn. He's also on Twitter. Thanks everybody. And we've got another 1 or 2 shows we'll put out the rest of this year. But it's been good to talk to everybody, and we'll see you soon.
Thanks, everyone.
Thank you so much. Yeah, have great rest of the year and happy holidays in advance to all our audience. Thank you.
Cheers. Thanks, everybody.
Bye.